So again, welcome to Alternative Data Adoption, survey results from non-prime auto finance companies. This presentation is being brought to you on behalf of FactorTrust, and joining me today is FactorTrust Vice President of Sales in Auto Finance, Randy Bob, and Connections Insights President, Marguerite Watanabe. Randy Bob, Vice President of Sales for Auto Finance, is responsible for leading the FactorTrust sales team focused in the auto finance industry. Randy and his team work with auto finance companies, captives, banks, credit unions, and buy-here-payer and direct-to-consumer auto finance entities. He's engaged with software vendors and marketing associations that support the auto industry, and Randy has more than 20 years of experience in the information services space with previous sales and sales management positions at Axiom, Experian, LexisNexis, FICO, White Pages, and eBureau. His experiences include working with lenders in many different verticals for all the stages of the consumer credit lifecycle. And Marguerite Watanabe, President of Connections Insights, has worked in the auto and automotive finance industry for more than 30 years, allowing her to truly understand its strengths, weaknesses, and opportunities. She devoted most of her efforts in sharing her expertise, and connections based on her experience in the automotive manufacturing, sales, captive, and non-prime auto financing, credit reporting, lead generation, and consulting. So with that said, I'm going to turn it over to Randy to begin the presentation.
Thanks so much, Nicole. We're real excited to have you guys join today, and I know that it takes a lot of time out of your day, so again, we appreciate your time. And I think that you'll find a lot of value with this webinar, especially since it's really about how your peers and how your fellow auto finance lenders are utilizing alternative data. And we know from the survey that the auto finance auto finance industry is still a very tight-knit community. So a lot of education and value that you get comes directly from your peers, so we're excited about that. So this survey, FactorTrust did commission this survey, and Marguerite conducted the survey in March and April of 2017, and the survey really focuses on current users and the explorers of alternative data. And so from a current user standpoint, we'll look into the format and sources of those that are currently using alternative data, and also look at how they're utilizing the alternative data. And from an explorer standpoint, we'll look at where they see the importance or value of alternative data, and hence that's why they're in exploration mode with alternative data. We'll also look at obstacles and really try to give you more of an education around alternative data and some of the frequently asked questions that come up with alternative data. We'll review key takeaways and then obviously cover any questions that you guys have and make sure that, again, we provide as much value as we can. So with that, I'll turn it over to Marguerite.
Thank you, Randy. I do want to let you know I do have a cold, and I'm going to try to fight through it. So I've been saving my voice up all morning. So the survey that we had was actually one that I did verbally with all of the participants. We had 32 that were conducted in the non-prime arena. 17 of those survey participants were actually using the data at this time. 2 were in the process of implementing the data, and 4 were testing it at the time. So as you can see, by now, the majority of the survey participants are now probably using the data itself. And there were 9 that were looking to explore the use over the next couple years, and you'll see the differences as we go through the survey results on what the difference is between the current users and the explorers. But before we do that, we wanted to just kind of set the definition straight on what we're talking about. And even as I was going through the interviews, it was clear that all the definitions are not the same when talking to the various entities out there. But if we break it up into these categories, it might make it a little bit more of a discussion. We can use this throughout the discussion today. One is that you can look at traditional and non-traditional, and you can look at trade line and profile. So if we take the upper left quadrant, we could talk about the traditional trade lines, what you get in the big 3 credit reporting agencies. In fact, when I asked the very first question of everyone saying, okay, what do you use to define alternative data, everyone said whatever is not on the big 3 credit or on the big I should just say the credit reporting agencies, on their files. So you got that up in the upper left, and then on the traditional profile data, you'll have some of the bankruptcy and judgments and liens. I know there have been some changes over this last summer, but that's the traditional data as well as some of the verification data. On the right side now of this column, you got the non-traditional trade line. So depending on who you're talking to, someone, when you ask, what is alternative data, they might be referring to the top side of this, the non-traditional trade lines, or in many cases they were referring to the non-traditional profile information, and not always would it be the same. So I did try to clarify that as we were going through, but again, when we share the rest of the results, keep in mind that what we'll be focusing on is the right-hand column there. And Randy, I mean, do you see that as you're talking with folks as well, that people see, that different definition may be evolving over the last several years?
Definitely, and from my experience, going back to when I started, I think public record and alternative trade line or alternative data really started in the mid to late 90s. And now I think that was driven by cell phone and cable. When cell phones really started becoming more prominent in the mid to late 90s, there was credit extended with those. And so a lot of the individuals applying for a cell phone back then were a lot different than your traditional mortgage, credit card, or auto consumer. So a lot of your telecom companies, there was a certain segment of their cell phone users that they had to look at differently. So I think that was a key driver in starting the need for alternative data. And obviously the economy and the United States footprint has continued to grow as far as diversity around the type of individual that's applying for credit and the type of credit that's out there. Another quick comment that I'll make under the non-traditional trade line, a question that comes up is, well, why aren't some of these trade lines in the traditional bureau, the big three? And a key reason for that is if you look at a short-term lender, a payday lender, the way that they send information to an alternative data provider like FactorTrust is going to be a lot different than how they send it to the big three. They may send it in real time, and then the payment schedule is weekly. And so and naturally the big three bureaus' payment cycle is typically 30 days. So those are some of the factors why you'll see a difference between the two. But as we'll talk about in this presentation, as you explore alternative data, ask as much questions as you can to understand the data, but also make sure that you're on the same page with the data provider. And another quick comment is that you'll see some of these segments both under traditional and under non-traditional, such as employment. And I think the key factor there is where is that data coming from? You can get employment from a traditional lender, or you can get employment information from an alternative or non-traditional lender. So that's kind of common sense, but I thought I would mention that. A lot of the definition of traditional or non-traditional is not so much the category, but where the data comes from.
Right, and I did find that there was quite a few questions around that, the sources of the data, and we'll go into that a little bit later. All right. So, before actually we go on to the next slide, I do want to mention that I also conduct some surveys for some of the, for other trade associations. And one thing that is of note is that alternative data, when added in as a survey item for an opportunity in the last couple of years, it has ranked very high. So, if I'm as bold enough to say on this phone call, there's no FCC on here, right? Alternative data is sexy. But also verification data as well. And so I think there's probably some overlap even on what is used for alternative data for decisioning and maybe on the collection and loss management side, as well as verification for both the decisioning side and the skip tracing side, for example. So it's kind of alternative data / verification data almost, to a certain degree.
Yeah, I would agree, Marguerite, and we're going to talk about that as we go through this survey, is that, to Marguerite's point, alternative data can be used across the full credit risk cycle. But to Marguerite's point, we're seeing more and more questions about alternative data to use for funding verification, for use in collection servicing. And again, we'll talk about that more as we go through the survey.
Okay, let's go to the next slide. So starting off with the question of what is your goal for current users, or what would your goal be, or what is your thought around it in exploring the data? So clearly you can see that mitigating losses is very high, in fact even more so for those who are exploring the data. But also for those who are exploring the data, you can see that expanding the scorable universe as well as giving rejected applicants a second look, interestingly enough, are higher than those who are currently using that data. But otherwise, the general ranking, is, you can see what it would be for the current users, those who have the experience, and maybe, for example, approving more applicants is maybe not as high, though it's still over half of the group for the explorers. So Randy, with this, when you saw these results, what were your thoughts?
It matches up exactly what we see on a daily basis with current users and those that are in the evaluation stage from testing. Mitigating, reducing losses is always a key priority. And then the other thing that comes up is that swap in, swap out objective. Swap in, swap out would typically also include universe expansion, improving more applications, and giving rejected applicants a second look. And it's exactly what you guys would expect on the phone. If an alternative data provider is providing unique data that you're not seeing today, we're helping you complete the financial or credit profile of that consumer. So with this data that you're not seeing today, it obviously can impact your decision. So by adding this additional data, that may change your decision. So you're swapping in some high risk with some lower risk and vice versa. So it's exactly what we see. The other thing I'll mention is that changing your credit policy, changing your scorecard, changing your model can be a time-consuming effort. So we've had more and more lenders ask us about using alternative data as an overlay outside their model. That can be a quicker road to production, a quicker road to seeing the value of alternative data. So that's been an application where we're an overlay to help them from a pricing and a deal structure strategy. So that's been an application that we've seen as well, or a goal.
And one slide that we're not showing here, but we did ask the question, or I did when I was doing the surveys, was what's the importance of alternative data, by the way, within their strategy? So, we're going to go through some of the objectives, but I think it's important to note that everyone said it was either very important or somewhat important. There was not anyone who said, I don't think it's important. So I think it was just important. I just wanted to share that piece as well. All right, so moving along here, when we asked the types of alternative data, so what are you currently using, as well as what might you be using? So public records data, understandably so, I think it's just much more common. People have been using it for a while, and I think they would like to expand that use. That's fairly high there, that you'll see. Employment data as well, a lot of that, it will come with the verification side of things. On top of that, you'll see the trade lines. So while not all of the current users are currently implementing the alternative trade lines, you can see that those who are exploring it would almost all say that they would like to be able to. I see that as a function of time, that more and more people are beginning to feel comfortable with that use and would like to continue to expand on that. Utility telco, that was something that was also very high for both the explorers. You could see here that they were really looking with that, as well as rental payment data. I did get back from the surveys that for those who are currently using alternative data, they were not always comfortable with the fact that maybe rental payment data was robust enough and it wasn't, you're not getting the full coverage. So those are some of the comments that I would make around that. But you could see that social media is quite low. Some people did say, and it was almost kind of felt like at times maybe a confession, that they were using social media, but it was more along the lines of skip tracing on the loss management side. Right. But no one was using social media for the purposes of decisioning. Correct,
yeah, and we've seen that as well. It's obviously a phone number and address is important in servicing, and that's what they would be using that for. And Marguerite, I think we've seen the same thing when we have the conversations. The alternative trade line data is very high from an exploration standpoint because of the unique value, and also because we all know that the alternative trade line data comes from alternative lenders, and that's a growing space. There's a lot of new lenders, especially online, that would be short-term installment. We even have the term as online payday lender. And so those are, again, those lenders that typically don't report to the big three, but you've got credit obligations for that subprime consumer you're not seeing today, and you can see it with the alternative trade line data. The other two pieces that come up almost on a daily basis from my perspective is employment and banking. And again, that data has been around for a while, but again, this is employment and banking from these alternative lenders. So again, it's basically data that you haven't seen before, because where it's coming from, it's coming directly from alternative lenders on a real-time basis.
Great. And let's talk about the sources of data. So if we're looking at the sources, this kind of goes back to the definition, as Randy had mentioned earlier. It's not so much always just the definition of what goes into traditional and non-traditional trade line and profile, but it also comes back to the source of the data. So when the participants were asked where they get their data, the third-party sources came up most often, followed by the credit reporting agencies, the traditional ones, and then non-traditional sources. It was interesting, though, as we tried to look at that, you know, how someone would define that third-party source versus the non-traditional, and we tried to define the, at least through my questioning, I was trying to get that the non-traditional would include the trade line data. But I would say that that was part of the whole discussion around where people view, you know, the type of data and where it's coming from. So with the sources, though, what do you see?
Yeah, that's been my experience as well. Third party has typically been a data collaborator. It's someone that collects data, typically public record data, phone numbers, addresses, emails. They collect it from a lot of sources, and they provide that to a data vendor. That's been a traditional definition. Then non-traditional has been more first party. That's data you're getting directly from the lender. And as Marguerite said, in today's world, a lot of that's the trade line data.
So how can we help, though, Randy? I think there's still lots of room for improvement, I got at least from the comments I was getting from people, on how we can help them understand those sources. And really, I know that companies like FactorTrust would love to be able to continue to explore new data sources, right? You're always looking to provide that to your clients. So is there a clear, I guess, how do you get input from your clients as to what type of data they're looking for as well?
Yeah, and I think it's a simplistic answer. We want to have as much conversation as we can with the lenders to better understand their business, and we obviously encourage the lenders to do the same when they're talking to alternative data sources. You know, a company like FactorTrust, we're going to be as open and honest as possible about where our data comes from, how it's sourced, the frequency, the consistency, and then obviously try to help you understand the value. Other alternative data providers may not be as open, so it's a simplistic answer, but I would just encourage our listeners to try to have as much conversation with alternative data providers and get as much detail as they can, because the more we understand about your business, obviously, the better, and then vice versa.
Right, and I think that open dialogue is most important, yeah. And actually the survey, was very, very helpful in getting, I think, that information out in terms of getting what your clients are looking for. If we look to the pie chart to the right there, looking at the format that the current users are using right now, you see that there's a combination, there's really a kind of a mix there, with the attributes and scores being used by a number of them, then scores only, and then there are some that are using attributes only, and then some who are using neither. So that was in itself very interesting. We've talked about it, but why don't you share with the group about why someone might fall into one of these categories? Yeah,
I think it's pretty straightforward. I mean, we see attributes and scores. At FactorTrust, we send attributes and scores to any test we provide. We send our full data output, which would be attributes and scores. And then based on the level of sophistication or where that lender is currently with some of their projects would typically drive whether they're attributes and scores, scores only, or attributes only. Typically, attributes only is a more sophisticated lender. It's building their own scorecard, their own model, and so that's a key element within that model. Score only might be someone that is not as sophisticated or doesn't have the time or the resources at the current moment to build a scorecard themselves, so they would use a score only. So I think it's pretty straightforward answers. And neither would be, we can provide back raw data such as here's an employer name, here's an actual address, here's an actual phone number, here's an actual routing number for the bank. So we can provide that raw data output. And then obviously we can, and other alternative data providers can provide an actual credit report. There's an actual FactorTrust credit report. I know that you can get an actual report from other data providers as well that would fall under the neither category.
So you really give options, and it might be based, as you're saying, somewhat on size, where they are in their cycle of model development, for example. So that's very helpful. Okay, moving to the next slide. In terms of the uses, now this is where I found it quite interesting. Really, if I had to draw a line after the fourth set of columns, we have the first four groups right there would be the underwriting side of things. And the applicant verification kind of falling under that, as well as servicing, and then the last one with loss management. The discussion that I had with the participants as well as the explorers really fell into the category of underwriting for the most part. I think that's where the mindset is for the use of alternative data. And when looking at it, you see that there is a difference between the current users and explorers, with the majority of the current users really having it as part of their scorecard development. And I know, again, that's part of the timing. And then you have other ways, though. In fact, it's not 100% across the board because people had multiple ways of using the data. So some might have 2, 3, some used all 4 different ways of the alternative data use. With the scorecard development, with the overlay of a scorecard, incorporation into manual processes for some, and decision tree. So again, it wasn't that you had to pick one or the other. But for the explorers, it was a little bit more on the overlay of alternative data with the existing scorecard. So if we stuck with just underwriting, is that consistent, would you again say, Randy, with what you've seen out there?
Definitely. We spend a lot of our time from an exploration standpoint and from a current usage within that scorecard origination phase or use case. And so it's been very common from either testing or usage that is where we add the value, that is where they did the testing, is how can you help me from an origination scorecard model standpoint. But as we've talked about, it's becoming more and more of a topic around, okay, I don't have the time or the energy right now to redevelop the scorecard of the model, so let's look at an overlay. That's definitely become a more popular topic, as we discussed about. And then the decision tree is something that's a product that's been around for a while, but here at FactorTrust, and I know other alternative data providers will look at this as well, decision tree can be based more on business rules versus a logistic regression risk model. So a decision tree might be easier for a mid-sized to smaller lender to incorporate, easier to implement because it's more business rule based versus a logistic regression model. And another quick comment that's somewhat repetitive is we've been a little bit surprised, I'm sure other alternative data providers have as well, is that, hey, you've got employment and banking data that could really help me with the verification funding piece. So we want to make sure that we ask the question from a vendor standpoint is, you know, what are some of your hot priorities or top priorities from a risk cycle standpoint? Are you more focused on issues within funding and servicing versus origination? And here lately, sometimes the answer has been yes. Obviously, delinquencies have gone up to where they should be for subprime auto, and so that's becoming more and more of a priority, is how can we handle the servicing aspect. And you guys all know from when you're dealing with any type of subprime product that servicing and collections really start at the funding verification stage. The more data you can collect on that consumer as you fund and activate the loan, the more that's going to help you down the road from servicing collection standpoint.
And let me add to that just the concern that you read about every day in the papers, it seems like, and at least with the industry publications, but fraud. So there's been so much more discussion around fraud and how that's picking up and how we're looking at things. So I think the verification goes to not only just helping you out in the long term with the collection side of it, also just kind of maybe putting off some of that, or at least catching some of that fraud.
Yeah, great point. I mean, that is obviously the original intent of verification, is you want to make sure that before you actually fund the loan that you've got the correct information for Sally, Sue, or John Doe.
Right. All right, and just to add to your point there, even though the loss management side of it is was not discussed as much originally when I went through the survey with the current participants and then talking about it with the explorers, I would say that for the most part there is a desire to use alternative data even more on the loss management side and the servicing side?
Yes.
Okay. Next. So talking about testing now. So you can see here from these slides, both not only with those who are using it and those who plan to, retro testing is the most common, and then you can see that hit, no hit might also be done. But these don't really have to be mutually exclusive, right? You could do both types of tests, and you shouldn't even do it one time, I would think. Seems that you would want to validate your results over time as well.
Yeah, I would agree, and here at FactorTrust, we actually provide, when we do a retro test, we'll have a hit, no hit part of the test as another view of the results. And I'm confident that other alternative data providers would operate in the same fashion. And typically the retro test is one where you're going to send performance data, and it's historical loans where you have known performance on those loans, and then most alternative data providers can go back to that point in time and look at how the data from the alternative data provider from that specific point in time when the application was created and completed, pull the data from that point in time and see how predictive the data would have been. And so it's really just giving you a flavor of the segmentation, the signal, the value of the alternative data based on loans that have known performance, known good and bad performance.
And the testing here can be done either with one of the data providers, or some companies choose to do it on their own. There's another thing that I learned through the survey.
Yes, yeah, definitely.
So depending, again, your size and your analytics capabilities.
Right.
You know, but I did get from a majority of them that they were saying that it's important to do this testing, number one.
Right.
And if possible, test with more than one. I mean, you know.
Yeah, it's very common, and you guys know that from your own personal experience, that typically if someone's going to invest in a test, they want to look at different options, and then look at the test naturally helps them determine the value, but also how will they actually implement the data if it does show value. So it's important for any data provider that we see if there's signal segmentation, but also how do we implement what's some suggested strategies that the data provider, alternative data provider can present that really helps you put that solution into production.
Right, and that's something the value you bring, is to come back and say, based on our experience with multiple, you know, auto financing sources out there, I would suggest maybe you look at this or can incorporate this, and I think that's the value that you can bring. All right, so if we're talking about that next level, okay, let's say you've done that test, and now you take it to the next level, and we have, you know, a slight difference here, again, with the current users and those who are looking to implement it later. About whether they should do that development inside, outsource it, or do some sort of hybrid. And I would assume that has to do, again, with possibly cycle as well as size of company and size of risk department. Is that true?
Absolutely. Those are the two key factors. What's the sophistication and size of the lender, and then where are they at from, if they are more sophisticated, did they just do a redevelopment of the scorecard and an overlay is going to fit better. So that's definitely components of it for sure. Okay.
And again, I think the important thing to note for anyone maybe on the phone is that no matter what your size or no matter where you are in your cycle, there is an opportunity for you to reach out and work with somebody to get this done. You don't have to put it on hold completely.
Yeah, and as you guys all know on the phone, you know, data providers are going to have, from a score or model perspective, we're going to have lots of generic models that we've built that we can present to you. And so sometimes you may have a sophisticated user that says, okay, I see value, but before we go through a redevelopment and customize our model, let's go ahead and utilize your generic model because you've had so much experience in this space that your generic model has a high KS, a high signal. So we're going to start there, and then as we continue to see value, that may evolve into more of a custom application.
Great. All right, moving on. This is not my favorite slide, but just because for those of you who know me, I'm always like the positive person. I don't like, we have to talk about obstacles, but we'll get it done here. How's that? So the things that come up are going to be, you know, and you hear about this one all the time, prioritization of IT. You know, technology is what everyone wants to work on, but it's the one thing that is often very difficult. I know in my old life, you know, we used to have priorities 1 to 10, and then you'd had 1A, B, C, D, and it's just like at the end, if you were like 2, forget it, you weren't going to get done anyway. So that's always a tough one. And then you see that still, for those who were asking this in the past tense, so it's interesting that the legal side was really for those who are currently using it. I think that really kind of maybe goes to the point that it's not as big of an issue anymore, I would think, for those going forward, or at least I'd like to think it is. Regulatory is probably not as high as it might have been in the past years. But still, always regulation is going to be something, and compliance on that side is going to be something we'll be thinking about. Risk model development, again, that often is a timing issue as well as capacity issue. Integration into LOS, I know, Randy, you can share more about that with us in a moment, but that's just something of kind of a cost of entry for many of the data providers as well. And then vendor management, another one of our favorite, departments we all get to work with at some point, right? A couple other things. So, well, let's focus on these first, Randy, and then I'll share the others that we got through the verbatims as well.
Yeah, the size of the company would definitely drive some of these. We definitely see with the larger companies that the legal piece, the vendor management piece, and the prioritization of IT resources, that's a key thing. The business strategy, the risk team can see value but at a large company, but they still got a lot of work from a legal compliance vendor management standpoint. So we're here to help. We've gone through a lot of vetting, and I know other alternative data providers can say the same thing. We're all here to meet all of your needs, whether it be from an IT security standpoint, a legal standpoint, a vendor management standpoint. We've all worked with the large companies, and we've all been through that vetting process. So typically, if you are a large or mid-sized company, what you have as requirements, we've already been through with some other companies. So I'll mention quickly the LOS piece. All alternative data providers, any data provider, a key strategy is how can we get integrated with all the LOS providers. And so it's a painful process because these LOS providers have a lot of issues around prioritization of IT resources as well. But the best answer there is the more you can help us as the lender push that LOS, the quicker hopefully we can get integrated, because we've already had conversations with all of them, and now it's a matter of just how can the alternative data provider you're working with move up that priority schedule, that project schedule, and that usually helps if they can, as many customers are pushing that LOS provider, the better.
Well, and to add to that, one of the verbatims, or one of the kind of comments that we got from one of the respondents was around documentation with LOS providers as well. So that was something that they were looking for. A couple other things that were interesting were internal politics. So you might have one department who says, yes, we really would love to use this, and another one saying, maybe not. So that's always going to be the case with anything. But again, I think alternative data is not as much contested anymore from a legal or regulatory standpoint. It's now more about prioritization, which did come up. A lot of it came up around, again, the timing with the scorecard development. That was something that was important. Now, there was someone who had raised a concern about personal data, but I think we've gone through that stage already. Is there anything left with personal data that we have to be concerned about? I don't think so, right?
I mean, it's always a good question to ask your alternative data provider. That goes back to the source, the format, and the consistency where it's coming from. At FactorTrust, all of our data comes directly from lenders from application data. So it's all data that the consumer has provided to a lender, and so that obviously helps with permissible purpose and PII questions or concerns.
So, and that's a good point. So around FCRA compliance, so going back to that original chart, so some of the data, what we would call alternative data, is FCRA compliant, right? And then others are not. Is that correct?
Absolutely. And I think we had this as a topic on another slide, but we may not get to it, so we can cover it here. Is here at FactorTrust, and I know other alternative data providers will do that. If they're not doing it, ask them and get their opinion, because here at FactorTrust, we will tell you our opinion on each attribute, each product, each score, whether we view it's an FCRA product or whether we view it's a non-FCRA product. Most of what we have at FactorTrust we view as FCRA products. Naturally, that's our opinion, our position, but what matters is what your general counsel, what your legal staff believes, because that's really the only answer. But you can use our recommendation and what we believe is appropriate for our data. You can obviously present that to your legal counsel and see if they agree. But the original comment is that pretty much all the alternative data providers will let you know whether they feel like this is a FCRA product where you can take adverse action or a non-FCRA product. FactorTrust is a credit reporting agency, and we do handle consumer disputes. So anything that is FCRA product, be sure to ask about their workflow, their process for adverse action and consumer disputes. Great.
Now the fun part. So the wish list. So these are the things that were asked for, and saying, okay, if I had the opportunity to say, okay, this is what I need more from, and this is what the most important part of the whole survey, I believe, it would really be categorized around certain topics within each one of these. But to summarize them, they would be around data knowledge and differentiation. We were talking about that earlier. You know, how can you help all of the clients and the potential users on understanding what data is out there and what can be used, just as we've been talking about with the FCRA, non-FCRA, profiling, trade line, et cetera. So that's one area. The integration, we've talked about it not only with the LOS side of it, but also within the scorecard. Utilization, I get that often. So, you know, how do I use this data? You know, it's great, but how can I maximize it? And if I am using it, how can I even use it even further in my business processes? And then there's the features and the functions around the scores and what is best for me, which of those types of data types should I use, and then how should I use it in a score development? Should I use it through a decision tree? Should I overlay it? I mean, all of those questions, I think, come up a lot from both of the users. And then, you know what, by the way, it'd be great if you can give me some case studies. Right. You know, share some more information that I can use to bring it to my team inside, to my regulatory team, legal team, upper management, whatever it may be. And then the last one was around cost. Right. Of course, everyone would love to have a lower cost, but also just around whether it's the testing should be free or the cost should be reasonable. I don't think anyone's asking for the data for free, but I think they want to see that cost-benefit analysis.
Right, I think this lines up with what we see when someone does a data test with us. FactorTrust does 150, 200 data tests a year, and so this is pretty much an exact flow of how those tests go. You go through a discovery phase, and then a proof of concept phase, and then an ROI cost value stage, and then how do we integrate that and sell it internally. So we've tried to position how we work with lenders based on this valuable feedback from the lenders. And so it definitely matches up to what we see, and it matches up to how we try to conduct a test. But I know other alternative data providers would see the same process. And I guess that's why doing a test is helpful. It kind of helps to answer all of these questions that come up.
Great. All right. So let's now go to some of the kind of common questions and see if we can get some of them maybe answered, and then Nicole, you can lead us through what other questions might have come up. But Randy, what are some of the common questions that come up?
Yeah, we've talked a lot about these, so a quick review on some of permissible purpose use case. You know, at FactorTrust, we are a credit reporting agency, so we consider our footprint, our permissible purpose, our use case to be just like Experian, Equifax, TransUnion. So, you know, and again, we have most of our products are FCRA, adverse action. We do have some non-FCRA products. So definitely from a lender's perspective, ask your alternative data provider if they're a credit reporting agency and whether the product's FCRA, non-FCRA. And I think we've talked about some of those already. The source of the data we talked about, but again, to review, first party, typically we define as data coming directly from the lender or the originator of the data. Third party, in my mind, has typically been more of a data collaborator that's working with a lot of different sources, collecting that data and then providing it actually to another data vendor. The frequency of the data and the source of the data, very important. Make sure you ask those questions because that's going to help you understand the value. I mean, is it reported frequently on a real-time basis? As we've talked about, the rental data is sometimes difficult because you may not get the consistent reporting from each one of those landlords or providers of that data. So be sure to dig into the details of the data and the frequency, consistency, and the source of the data. The last thing, how do I consume or utilize the data? I mean, we want to make sure we're as close to you as possible on that because that's really as critical as anything else is how do I actually yeah, I see some signal segmentation value with your data, but how do I actually use it? How do I actually get it into my workflow, into my process? So we want to understand as much as we can about that, and then help you, and then give you ideas about the different options. I know all other alternative data providers would do the same thing.
Great. And I think it's important that not every company, no matter what size or where they are, is the same as their peer. Everyone's kind of at a different stage, and so deserves to be treated as an individual company, and I think their answer might be different for each company.
Right. So I think the next slide is key takeaways. And again, this is a summary of what we talked about, but it's I think it's a good review. You know, really get to know as much as you can about the alternative data. And to Marguerite's point, best practices, use cases might help with some ideas, and then you can customize it to your specific process and workflow. And, you know, talk to current users. And that's what I like about the auto finance. I mentioned that earlier. It's such a tight niche industry. Networking and communication with your peers is still so important for you guys. It's still a key value point within the industry, so continue to do that. And, you know, with that, you can learn the best practices and how to utilize it. Also, within your companies, make sure that you talk to others within your company. A lot of you may be focused on originations, but you have a whole separate group for servicing collections. You know, make sure you continue to partner with alternative data just like you would with other projects, because that can be very helpful, because you may learn something from your servicing team that, hey, if we could get the data this way or get that piece of data on the front end, that's going to help us so much more on the back end. And of course, alternative data can definitely add value, not only with originations, but those other pieces of your workflow, funding, verification, servicing. So Nicole,
great.
Turn it back over to you.
Thank you for the presentation, Randy and Marguerite. That was great. So now we're going to move on to the live question and answer portion of today's presentation. So again, if you do have any questions, put them in the Q&A chat, and we'll answer as many as time allows. Looks like we have about 3 minutes left, so we'll try to get a few questions in. Let's see what we have here. And I will give this to one of you guys, whoever wants to answer it. This person says, in your opinion, which alternative data source attributes have the highest performance, or KS, as a new data source for originations for a subprime auto lender?
I give that to Randy.
Well, again, we've covered some of this, but I think it's a good question to review. And what we've seen that had that highest value as a standalone attribute is that alternative trade line data. And I think it's because it's unique data you're not seeing today, but it also has high value because it indicates additional credit obligations for that consumer that you weren't aware of today. So as a standalone, that's what we see having the most value. Probably second would be employment and income, or employment and banking. I think those are probably the other ones that have, as a standalone, have high value. I mean, as most of you guys know, in a perfect world, without other obstacles such as IT or cost, a perfect world is to combine alternative data into your own custom scorecard or into a model. And we definitely see that at FactorTrust as well. When we combine different alternative data segments, that has a higher value, but that's common sense. But I encourage you guys to explore that option as well.
Great. Okay, and it looks like we'll have time for one more. So Marguerite and Randy, you guys both might be able to answer this question, but, you know, over the years, have you guys seen a greater use of alternative data as time has, you know, gone on?
Oh, I'll start off. So, you know, I've talked about it in some in writing and some verbally as well, that, you know, alternative data, even though we probably used that term on this webinar at least 100 times, alternative data you can almost now divide up into mainstream alternative data and then more even, you know, data that's way out there. But I think in terms of the mainstream alternative data, by far this is something that's now, you know, much more commonly used, and it will become, I think the use of it will become even greater.
I agree, and I think the additional comments to that, I made the comment earlier that the lenders continue to expand from an alternative lending standpoint, so that continues to growth. And then I think millennials, segments like millennials will continue that growth as well. Millennials may be more inclined to use a non-traditional online lender versus a traditional lender. And I think you'll continue to see that growth in both areas from a lender standpoint, but also from a consumer standpoint. So yeah, I just see continued growth in this area.
Great. All right, well, looks like that is all we have time for today. So again, as we close, if you'd like to review today's material at a later date, the slides from today's webinar will be sent to you via email. And if you'd like more information, feel free to contact Randy, visit the website. The survey is on there, so if you have not viewed it, feel free to download it and look at it. But that concludes today's presentation. So I'd like to thank Randy and Marguerite both for joining us today. And as always, thank you guys for taking time out to join us.
Thanks, Nicole.
Thank you.